US markets have definitely outperformed the rest of the world. And I would say, the exception of this year, because I know TSX actually is close to the S&P in terms of gains for the year, but prior to this year, for quite some time. And as I said off the top of the show, I've been investing individual investors' money in the US now for quite some time, or I should say in the US and globally, so outside of Canada. For every one investment, I started off maybe with 3 to 5 outside of Canada. Now it's probably closer to 10 or maybe even more. And I think it's a function of a couple of things. Number one, obviously the outperformance by the US markets, but also the fact that our market here in Canada is small. We have just over 200 stocks on the TSX, or the Toronto Stock Exchange, whereas in the US, you have many, many more stocks. In Canada or in Toronto Stock Exchange is made up of predominantly 3 sectors, one being banking, 2 is your oil, and 3 your materials or gold stocks. And for many investors, they don't like the risk that oil and gold present, tend to be on the higher risk side of the scale. And so that only leaves them with maybe banking and the other 25%, which is made up of a couple of railways, maybe, Loblaws, a company like that, Shopify, which is our largest tech name. So there are some names that you could take a look at, Dollarama, for example. But for the most part, you're looking at 3 sectors that dominate. And that's, again, a big reason why you want to go outside of Canada. And many mutual funds, Canadian mutual funds, have as much as 45, 49% invested outside of Canada. Can't go more than that, because to be considered a Canadian mutual fund, you need to have at least 51% invested in Canada. So even Canadian mutual funds or anything Canadian managed product, to stay Canadian, you need to have at least 51%. But many of these investments have the other 45, 48% invested abroad. So US outperforming a lot of other parts of the world. Our first chart here shows the US equities, their dominance, and the value of versus the value of global stocks. So you can see here, US equities dominate the value of global stocks. How much of the global stock market is US? 67%. Wow, that's a massive number. Look at the next highest one. You're looking at 5%, Japan. You have other at 20%. Now that makes up obviously many countries. Canada makes up 3% of the world's stocks. Even China only makes 3%. So it is interesting to see how much the US equities or US stocks dominate in the world. And I have to believe that number has gone up tremendously just in the last few years with the dominating tech stocks that United States has. Microsoft, Amazon, Meta, formerly Facebook, Alphabet, formerly Google, Nvidia, AMD. These are Micron. These are massive companies. A lot of them in the tech, all of them in the tech space. I shouldn't have forgotten Tesla, right? We call these top 7 or the 7 largest the Mag 7. Tesla, another $1 trillion company. So I think that these stocks have really caused that number to balloon to 67% over the past few years. Our next chart that we have here is a chart on US stocks consistently outperforming global ones. And you can see here, maybe with the exception of 2022, when the United States raised interest rates 10, 11 times, yes, the global markets or global stocks outperformed by just a hair. But if you look at the orange bar there, you can see the dominance of the US market versus the global ones. Take a look at 2024. You're looking at 28% gain. As I said, the TSX is also in that 25-ish% range. So not dominating the TSX as much, but if you look at Europe and other areas around the world, Asia, you see, for example, China. China is struggling with growth. Their exports were down. Their imports were down recently. So China is definitely struggling. Anybody doing business in China, whether you're Apple, whether you're Starbucks, whether you're a chip maker, anybody, you're seeing softening. Nike, you're seeing softening coming out of China. And China, as we know, makes up a very large percentage of the Asian market. So definitely, we continue to see dominance in the United States. And that is why I continue to put my clients' money in the United States. Now, one last thing I will touch on is that a lot of people are going to tell me, Alan, but I only have Canadian dollars to buy. How do I buy US stock, for example, with Canadian dollars? I'm going to lose almost 30% to currency. Well, you are correct. Right now, the Canadian dollar is very weak. To buy US stock or US dollars, it's probably not worth it. Well, I will say that I continue to buy US stock. And the reason is because, yes, you may lose to currency when you buy, but as long as that currency remains plus or minus a few percent within that range of when you bought, when you sell, hopefully the stock goes up. You make 20, 25% on the stock, let's say 15, 20%, whatever it is. And if you lose maybe a couple of percent due to currency, I still think it's worth it. So I don't think you need to be fearful that the Canadian dollar is going to rise significantly. You just want it to stay within a range of a few percent of when you bought the US dollars to when you sold that stock and converted it back to Canadian. If you can have a stable dollar, that is what we want. Over the last couple of years, actually, it's worked in my favor or my investors' favor or anyone's favor that has taken Canadian dollars to buy US because the Canadian dollar is weakened. So your US investments have gone up. And when you take it back into Canadian dollars, you definitely would have another gain there. So not only did you make money in the markets this year, but you also, if you owned US, you would have made money on the currency trade as well. So double positive. So overall, I still believe the US is the best place to invest right now. It is a dominating market. It is the largest market in the world. Roughly 20% of the world's wealth flows through its borders every single day. And it's a market that I think you need to continue to be in if you want to see growth in your portfolio.